Hello and welcome. Today I'll show you how to recognize an effective insolvency early warning system for a company with a simple quick test, without spending days studying balance sheets. Stay tuned. Company analyses usually require a lot of time. If you are a value investor, it is essential to take a close look at a company's balance sheet. Even experienced investors like Warren Buffett need time to convince themselves of the strength of a company. Small investors, on the other hand, often have a full-time job and cannot spend days looking at balance sheets to find out whether a company will still exist next year or whether insolvency is imminent. But there is a solution. With just a few targeted key figures from the balance sheet, which can be counted on one hand, you can use an effective early warning system to identify potential insolvencies at an early stage. What sounds terribly complicated is actually quite simple. I'll first introduce you to the key figures, and then I'll show you an example of how they are used and how I use them. Key figures for financial stability and earning power. 1. Liquidity. When assessing the company's liquidity, the quick test is interested in whether and to what extent the cash flow generated is suitable for servicing the company's liabilities. The company's liquidity is therefore assessed using the following formula. Liquidity is equal cash flow before taxes divided by liabilities. 2. Financing. Financial stability is strongly determined by the origin of the funds used for financing, which is why the share of liabilities in total capital is interesting for assessing the risk of insolvency. The financing structure of the company is assessed for the quick test using the following ratio. Financing is equal balance sheet total divided by liabilities. 3. Assets. This key figure shows the ratio of inventories to operating performance. It shows whether the company is producing for stock or for sale. Too much inventory ties up too much capital and therefore has an unfavorable effect on the financial stability of the company. Assets is equal inventories divided by operating performance. 4. Return on total assets. The return on assets is calculated as earnings from ordinary activities before interest and taxes in relation to total capital. This key figure is used to determine the return on total capital employed. It indicates how efficiently a company has used the available capital. Return on total assets is equal result from ordinary activities divided by balance sheet total. 5. Return on sales. The earning power of the company is measured for the multiple discriminant analysis using, among other things, the return on sales too. This key figure shows the return on sales achieved on the basis of ordinary business activities, thus enabling a statement to be made about the company's profit situation. Return on sales is equal profit from ordinary activities divided by operating performance. 6. Capital turnover. Another factor in assessing the company's earnings situation is capital turnover. This key figure measures how often the capital employed was turned over by the operating performance. The higher the capital turnover, the higher the potential profitability of the total capital, or the less capital investment is required for a certain return. Capital turnover is equal operating performance divided by balance sheet total. These 6 key figures are necessary to find out the financial stability and profitability. Where are these values now? The balance sheet and profit and loss account are required to calculate the key figures. You can read or calculate the figures there. From the balance sheet, total capital, equity, debt capital. From the profit and loss statement, operating performance, cash flow before taxes, result from ordinary activities. Calculation formulas. Cash flow is equal profit plus depreciation plus provisions. Balance sheet total is equal total capital. Operating performance, sales revenue plus or minus changes in inventories of semi-finished and finished goods, or work in progress plus cash discount income plus other ordinary income plus own work, capitalized. Result from ordinary activities. Operating result plus or minus financial result. The evaluation. The 6 key figures are multiplied by weighting factors based on the following scale. Key figure 1 is equal liquidity, multiplied by 1.50. Key figure 2 is equal. Financing multiplied by 0.08. Key figure 3 is equal assets multiplied by 0.30. Key figure 4 is equal. Return on assets multiplied by 10.0. Key figure 5 is equal. Return on sales multiplied by 5.00. Key figure 6 is equal. Capital turnover multiplied by 0.10. The products are then added together. Now we get a number. Whether the company can be classified as good, medium, poor, or at risk of insolvency depends on the level of the discriminant function, i.e., the sum of the key figures. The rating: greater than 3.0, extremely good; greater than 2.2, very good; greater than 1.5, good; greater than 1.0, average good; greater than 0.3, poor; less than or equal to 0.3, slightly at risk of insolvency; less than or equal to 0.0 at risk of insolvency; less than or equal to -1.0 at high risk of insolvency. The higher the value, the better. Evaluation of an example of the company Visa Inc. Many people know the company Visa Inc., so I will present it here in detail over 5 years in the appendix of the Insolvency Early Warning System. The figures I take from the balance sheet are from the company's own homepage. The financial year ends at the end of September. I personally take the figures for the Insolvency Early Warning System as follows. Liquidity is equal to cash flow before taxes divided by liabilities. Financing is equal to balance sheet total divided by liabilities. Assets is equal to inventories divided by operating performance. Return on assets is equal to result from ordinary activities divided by balance sheet total. Return on sales is equal to result from ordinary activities divided by operating performance. Capital turnover is equal to operating performance divided by balance sheet total. The following figures have been derived from the number, always from 2019 to 2023 in dollars. Here are the figures read off. Cash flow before taxes, liabilities, balance sheet total, total liabilities and equity, inventories, operating performance, net revenues, profit on ordinary activities, income before income taxes. These 6 figures from the balance sheet are needed to obtain an evaluation. After the evaluation, I come to the following result: 5.98, 5.38, 5.95, 5.95, 6.32. Evaluation from the years 2019 to 2023. I take these figures from the balance sheet. If you use the calculation formula, you get a slightly different result. But if the value is far above 3, it is irrelevant whether 6.32 or 6.42 is used as an example. All values in the last 5 years were above 3. Therefore, the insolvency of Visa Inc. is unlikely. I evaluate it as follows. If the value improves 3 years in a row, I rate it as quite positive in the Insolvency Early Warning System. If the figure is always higher for 5 years, I rate it as very good in the Insolvency Early Warning System. All figures must be above 3. In this case, the value is almost 6, so the probability that Visa will slide into insolvency at this point is extremely low. What do you think about my Insolvency Early Warning System? Let me know more in the comments. I would be very pleased. Thank you very much. Conclusion. With the help of the 6 key figures and their weighting and evaluation using the tables above, it is quick and easy to make statements about the risk of insolvency in a company. Used regularly, the quick test helps to identify problems in good time and to take countermeasures at an early stage. A small note at this point: all this is not investment advice, and this is my personal research work. I will publish a video with a complete analysis of a company. Until then, I will present my approach to analysis to help you understand my analysis. I hope you enjoyed the video, so I would be very happy if you would give me a like, subscribe to the channel, and activate the bell. That way you won't miss any more videos from me, and you'll be informed immediately when a new video is published. Thanks for watching the whole video, and see you soon.